Okay, good evening, everyone. Today we're going to focus on paper trading futures using OKEx. And if you have the OKEx app, you can just log straight up, log into the app, and go to assets. You see start paper trading, click on it. And I love OKEx paper trading because it's very organized. It gives you funds to trade in every market, a certain amount of funds, and you can refresh the amounts of funds that you're given. So straight up, let's go to perpetual swaps, perpetual swap. Click on it, and it takes you here. This is where the magic happens. And this is what I love to trade. Usually you're given a certain amount of Bitcoin to start trading your futures. Now, it is important that you take notes of where you are when you're trading. You have to take note that you are in a demo account and not your real account. For those of you who don't know, demo account is where you trade fake money, so you can make all the mistakes that you would have made if you were trading with a real account. So let's see how much we got on this account. So yeah, let me just introduce you to the user interface. Okay. Usually when you log in, you see this charts area. This is the area where you have the charts, and you can use this to go full screen, so that you can, basically when you're trading technical analysis, you want to look at the charts, so that you can, read the charts. So when you enlarge the charts, you can, see it more clearly. And in the charts, we are still going to do more on technical analysis later, but this is just a brief example. You see, we have the zoom, is it full screen or go full screen? We have settings, we have screenshots, we have indicator, and then you have the time frames. So you have 1 hour, 4 hour, and 1 day. And yeah, you can use any time frame, 1 minute, 3 minutes, 5 minutes, 15 minutes, and so forth. So if, for example, go to the 5 minutes time frame, it means that every candle here, by candle, I mean every of this thing that looks like a stick, this red stick and green stick, every candle means every candle is what 5 minutes. That's what it means when you're looking at the 5 minutes time frame. So 5 minutes ago, Bitcoin, dumped. That's what this red candle is telling me. And this green candle now, because it's the latest candle, is telling me that Bitcoin is, pushing upwards. So the green candles, they represent a upward movement in price, and the red candles represents a downward movement, or the best way to actually put it. Now, if you look at this place, you see some figures. This is open, this is high, this is low, this is close. All right. So when I'm moving my cursor around, you see that the figures are changing. Let's leave it at this long red candle. You see, the figures are now red. If we put it to this green candle, the figures are now green. So let's leave it at the green candle. And let's leave it at the green candle and let's go. Oh, every time I move it, it changes. Okay. So let's leave it at the green candle. Now, let's see. So what this is trying to tell me is that this particular candle, within the 5 minute time frame, Bitcoin opened at 11,240.7. And then it had a high of 11,240.7. And then it had a low of 11. Hold on a second. Something's not right. The figures are not supposed to be the same here. So I'm just going to do that the cursor. So just look at that place. You see that Bitcoin had the high of 11,221. Sorry, it had an open of 11,221. It had a high of 11,293. It had a low of 11,221, and then it has a close of 11,283. If you trace it up, the high is 11,293. Let me enlarge this so we can see it clearly. Yeah, so this is just basic. So if you trace the price down to this place, you see 11,293, and then the close. Sorry, we have the high, which is the highest price, the low, which is the highest price, and then we have the open and close. We're going to do more on candlesticks later. Candles, you can be studying candles for 1 month. That is a course on its own. I don't want us to go too deep into that. All right, but just know that in a 5 minute time frame, each candle represents what that time frame is talking about. Represent 5 minutes. In a 1 hour time frame, each candle represents 1 hour. So let's use the 1 hour time frame. For example, you can see that each candle represents, so this candle represents 1 hour. At this particular time, within an hour, Bitcoin went really up. And so those are what these figures mean. OKEx, USDT, BTC swap. So this EMA, they are referring to indicators, and you can add or remove indicators from this place. Yeah, so you can select indicators. Indicator is also another long subject that we'll not go into today. There are many indicators that indicate many things, all right? Yeah, but the simple ones that are present, you can see I've hidden the 2 indicators. The simple one that we're going to refer to in this video are the EMA 50, which you can call it the 50 exponential moving average, and the EMA 200, which is the 200 exponential moving average. So you can hide them, or you can even delete them and add them back. Okay, let's delete them. Let's add them back. We're going to look for EMA, and you can edit it. Let's call it 50. I shouldn't have deleted it. Okay. I think I messed things up. Cheat it again. So there are different EMAs that you can use. EMA, moving average exponential. Yeah, this is what I'm looking for. Yeah, so the 50 moving average. I like to use the white color. And I also like to use the 200 moving average. And let's also give it a white color. Okay. So we've talked about these indicators before. We've said that they basically show you the trend of the market. Now, indicators are supposed to indicate certain things to you and help you make a decision. Because, like there are only two things that can happen in a market, in any given market. Price can only go up or go down. So your job as a trader is to figure out where the price is going to go and trade in that direction. The price is going up, you want to place a buy order. If the price is going down, you want to place a sell order. When you place a buy order, it's called a long. When the price is going up, you place a long, and if the price keeps going up, you make profit. But if you place a long and then the price goes down, you make a loss. All right. So these indicators show you the trend of the market. So generally speaking, general crypto thumb rule is you want to trade in the direction of the trend. So you can see that the indicators now, they are like as if they are going up. So this shows you now that the market is trending upwards. All right. So you want to be looking for opportunities to buy. So this indicator shows you the trend of the market. One simple trading strategy that you can use is TAE. TAE, okay. I want to write some things.
This is my body.
Does anybody know what the meaning of TAE? What TAE? Yeah. So generally speaking, we have TAE. So we want to look for the trend of the market. You want to look for an area of value, and you want to look for an entry trigger. So those are the three things you are looking for when you want to make.
After the meal, another cup of wine is then you said, "This is my blood. It's poured out for you." And with it, God makes you happy.
Okay, someone is talking in the video. I have to meet that person. Trying to figure out how to do that. Okay, he has muted himself. Okay, so you want to look for the trend. You want to look for an area of value, and you want to look for an entry trigger. So this indicator is a simple indicator that indicates the trend of the market. I mean, you can see that the market is moving upward, the price is going upward. But if you want to be extra sure, I mean, it's very obvious. Price is going up. These candles represent the price, and so now that you know the trend of the market, you want to be looking for buy opportunities because you want to be trading in the direction of the trend, and then you want to look for an area of value. And to look for the trend of the market, you can use the 50 EMA. This is an indicator of 50 EMA and the 200 EMA. And then to look for an area of value, you can use support and resistance. And to look for an entry trigger, you can use the candlesticks. Now, the candlesticks, remember, the candlesticks refer to these green and red, sticks. These are the candlesticks. So the first thing you want to do, a very simple trading strategy, know the trend of the market and the 50 and 200 EMA. They have, their web sources define the trend. The next thing you want to do is know the area of value, and one way you can do that is using support and resistance, and then look for an entry trigger. And you can the candlesticks, like I said, there's a whole course, there's a whole book on candlesticks that if you're a trader you should check out, because each candle is telling you something. Like this candle, every candle has a body and a wick. You see this fat part is the body and this thin part is the wick. So this candle is a bearish candle. It's indicating that. So when you see a candle like this where it has a very long wick upward, it's indicating to you that price may go down. All right, you can see the same thing happen here, the same thing happen here. When this candle appeared, the price dumped. All right, so when you see a candle like this, it's indicating that the price will dump. And the opposite of this candle, what's the name of this candle? I don't know their name. The opposite of this candle is, you see this other candle, this red candle is looking the opposite. You see, we have a long wick here, and it's indicating that the price wants to go up. All right, so different candles, they have the candles can give you different indications, and they're a good entry trigger. So after finding the trend, the way you know the area of value.
Toju.
Yes.
Sorry, I don't know what 50 EMA and 200 EMA means.
Okay, they are indicators that you use to. There are many indicators that are used in trading generally. It's not only cryptocurrency trading, forex, any market at all. All right, and yeah, so the indicators are to indicate certain things in the charts. They are used in technical analysis. So, and technical analysis is where you use charts to make an educated guess of where the market is going to go. You understand? So
Okay.
this indicator now, this particular indicator, the EMA, and the EMA is a course on its own that you can study, but to just summarize what they do, all right, or how we can use them, or their usefulness to us, is that they indicate the direction of the market.
All right.
And generally speaking, you want to trade with the trend. The trend is your friend. If the market is going up, you want to be buying, because there's an upward momentum. It's like a river that is flowing. You want to flow with the markets, But if the market is trending upwards and you are selling, you are trading against the tide, and it's not going to be pretty, because in an upward trend, what happens is that you have higher highs and higher lows. So I will explain that later. All right. So this EMA is just an indicator. There are many indicators. Let me add another indicator to this chart so that you understand. Let's add the volume. So the volume is an indicator. So when I've added it now, so this is the volume indicator at the end, and this volume is showing you the amount of the asset that is being traded at that time. So you can see that the volume here is very low. The volume here is very high. All right. So the volume here is the high. I think the highest volume here is this one. All right. And of course, the green is where the price is going up and the price is going down. So by looking at the volume, so if the volume starts building up now, all right, you will know that something is happening. All right, that maybe a lot of people are buying or a lot of people are selling.
Yeah.
And because the volume is just the amount of that digital asset that is being. So if the volume starts building up and there's no movement in the market, you know a sudden move is about to happen, because why? A lot of people are trading at that time. There's a lot of activity, and the market is about to go boom. All right. So yeah, so that's volume. So when people are trading, when you're trading, you want to add some indicators that will tell you what's happening in the market and allow you to make an educated guess of where the market would go. All right, so that's what indicators do. Another Another popular indicator people use, RSI. There are many, um, relative strength, relative strength index. One that I like is the AVR, average true range. Yeah, this is another beautiful indicator, and this one is indicating the volatility of the market. Volatility is basically price change. Right now the volatility is very low. If you're trading now, it's not sweet, but if you're trading in this period when you can see very long candles, the volatility is very high, and of course the potential to make money or lose money if you can get liquidated is also very high, right? So different indicators. So you don't want to overfill your charts with indicators. You just want a few indicators, that will just give you what you need. And a very common strategy that you can use is TAE. You want to look for the trend, you want to look for an area of value, and you want to look for an entry trigger. The trend will show you where the market is going. So you want to trade in the direction of the trend. The area of value is going to show you where you want to be trading, right? There are some places in the market that they are not worth looking at, right? They are not a significant area of value. So you just you look for area of value, and then once you find a good area of value, use the candlesticks to give you an entry trigger, right? Okay, let's try to look for an area of value in this chart. Now, use lines, right, to do support and resistance. Let's use an horizontal line. Support is basically, do I have to define that now? This is another line that I've drawn before. Let me delete it. This is another line. I think this is another line. Yes. Okay, so this is a line. We can choose to change the color of the line to red or whatever. Let's give it yellow. Let's make it a little bit thicker. Let's make it dotted. Okay, I like it this way, right? So you can duplicate the lines by cloning it or copying it, right? So in crypto, there's what we call support and resistance, all right? Now, if you look at this chart, you will notice that when the price gets to some places, the price does not move past them, right? Like this place now is an area of support. No, it's an area of resistance. Do you know why? Because it's as if the price cannot go above this place, right? It's as if when the price gets here, it starts coming back. When it gets here, it starts coming back. So it's an area of resistance because at this point, I remember it's an area, although we are using a line to denote it, um, it's actually an area, all right? Area is length times breadth, all right? So around this area, the price keeps coming down, all right? So let's use another time frame. Maybe we'll see it better. Let's use the 4-hour time frame. Okay, let's use the 5-minute time frame. Okay, fantastic, fantabulous. Okay, so you can see now the area of resistance here. Excuse me. You have this resistance here is here, and then we have the area of support. The area of support is like the opposite of the area of resistance. That's where when price gets to, it doesn't go below that point. I'm trying to drag this, but then let me just do this, okay. And then let me clone this. So this is an area of support because price, or when price gets there, it bounces, right? So you can, okay, Ujo is trying to get in. Okay, so yeah, so the way it works now, remember that in our strategy we are looking for an area of value. An area of value, and the indicator we are using to do that is support and resistance. All right, and we are drawing our support and resistance using these lines, the the lines. All right, now take note that an area of support, an area that is once a support, can become a resistance. All right, so that's how you know that it's actually a very significant area. All right, let me see if I can get, this is the BTC USDT chart. Let me see if I can get an area. Yes, fantastic, fantabulous. Right, so this is a good, in this case, this is in this particular, at this particular point is a support. It's sort of like a support because the price came here, right, but it couldn't break, couldn't go down, then it went up again. All right, but when you come here, it's acting like a resistance, right, because the price came here and then went back down. So and then you come here again, it's like a resistance too, like an area of resistance too. Right, so let's duplicate this line. Let's duplicate this line. Yeah. So this is another significant area. Right. Remember, let's go back to our strategy again. After knowing the trend, we want to know an area of value, and that's what we are looking for by drawing these lines. Right. So at this point, when the price came here, it couldn't break through. So this is like an area of resistance, right? And then it came down, and then it wanted to go through, it came down again, and then went here, and then it pushed, and then it went through, but it couldn't pass this area. So this is actually, you know that whenever price comes to this line, it sort of like changes direction, or there's a major decision to be made. So these are the areas of value. Define the area of value. And then when you've defined the area of value, the next thing you want to do is another area of value. The next thing you want to do is that you want to, the next thing that you want to do is that you want to, what do you want to do now? You want to, let's go to this, you are looking for an entry trigger. Now, but remember, if you are going to make a trade in this chart, according to our trading plan, you shouldn't be looking for an opportunity to sell, all right? You should be looking for an opportunity to buy. So generally speaking, you want to buy at the area of support, because at the area of support, the price will always go up. So you want to be buying at this point, and you want to be selling at this point, right? Because it's like, so if I'm a scalper now, and this is a 5-minute chart, I'll just put sell or sell. I don't now remember the trading direction of the trend. I don't want to be looking for sell opportunities, but it's all the sell opportunities are actually here in the area of resistance, and all the buy opportunities are here. So the smart trader now will be putting buy opportunities here, all right? Because it is an area of value, and it is the support. You want to be buying at the support, and you want to be selling at the resistance. So using this simple strategy, you can make profit. Number one, you look for the trend, you look for an area of value, and then you look for an entry trigger. For the entry trigger, remember I told you that each candle is telling you something. Each candle has a story to tell you, right? I told you that every candle has a body. This is the body, which is the fat part, and a wick, which is the low part. And when you have a long wick and a very tiny body, and the wick is pointing downward, it's indicating that the price wants to go up. All right, this kind of wick is called, I'll look for the name. Each candle, every candle you're seeing here has a special name, that is given, all right? But if there's, I don't want to go detail into candles right now. And quite frankly, you don't want to go into the details of anything when you are trading, because the rabbit hole is very deep, and you can be learning a lot of jargons that are very useless, right? You just need to know the basics, because there's something they call analysis paralysis. If you become a very great technical analyst, you may not become a very profitable trader because you now have too many indicators to look at. You now know too much. You now have looking at volumes. Should you look at the RSI? Should you look at the AVR? Should you look at the EMA? You understand? And then it becomes confusing. All right. So you just want to know the most important things. Now about candlesticks. Before this video comes to an end, let me just give you this secret. Whenever you see a candle that has a long wick, like this candle, it has a body and then it has a long wick. If the wick is downward, it tells you it's a signal, it's a bullish candle. It's indicating that the next candles that is coming will be bullish. Right? So if, for example, we see a candle like this somewhere here, it's a good buy trigger. All right? Like this candle now. This candle is a good buy trigger. It's telling you that okay, the next candle is going to be a bullish candle, right? And then the opposite, when this long wick is in the opposite side, like it's above the body of the candle. This is the body of the candle, and this is the wick. Let's look for a situation where, okay, maybe we'll use another chart. Okay, I'll just stop this video, and then in next video we're going to place live trades on the OKEx demo trading platform using this simple strategy of identifying the trend, identifying the area of value, and using candlesticks as entry triggers. We're going to use this simple strategy to make a trade. All right, so I'm just going to end this video and start it again.
Sorry, please, before we go, can I ask a question?
Okay.
Okay, so on this OKEx, how do you know if you're in your live account or the trading or the demo account? Sorry.
Let's go back home. When you go back home, you see now it says paper trading. Yes, so if you want to go to the live account, you come here to click on trade in real markets. And then if you want to go to paper trading, come to access again, and then click on paper trading. And then you get this green signal. I'll show you that you're in paper trading. And then when you go to trade, but I noticed that when you are in the trading room, there's actually no way to figure out if you are in demo or
exactly
or live. And I think that's the feedback we have to give to the team. Maybe they should do something about that. Okay, so I'll end. Okay, any other question? Yeah.
No, I'm just saying that the view, I don't know, for the live, from my own view on my own end here, is kind of different from what I'm seeing here. Yeah, both the charts from the book order charts,
okay, yeah. So yeah, like the orders on demo, they are different from the orders in the real market, right? Is that what you mean?
Yes.
Yeah, I noticed too because I've been trading BTC, USDT all through the day, and this is not what I saw. Let me go to the real market and see how it is. This video will end in 2 minutes, and then I'll start another one again to just make a live trade. So this is what's maybe I'm in here now in the real markets.
Because this view is entirely different from the view I'm seeing on my screen.
Okay, let me just end it for the because video is soon going to go off. I'll just few seconds, less than a minute.